Good morning and welcome to this session of the live learning classes organized by the Board of Studies of the Institute of Chartered Accountants of India. It's nice to see many of you here so early in the morning. We have the usual group who always interact and respond and ask questions. Others can also pitch in if you are here, and whenever you have a doubt, feel free to just type it into the query pad. And so again, I see Sudhanshu, Ishan, Darshan, of course, welcome, sir. And madam, your name is appearing as Miss Singh Rajiv Kumar. Can you know your name? Because I'm sure you have a name. And Komal is here, Sushil, Keshav Thakur, welcome. And Bhumika. Okay. So Darshan says that Tata Tech IPO is a red herring prospectus. Correct. So what they will do is, nearing the date of the issue, they will come out with a proper prospectus with the price band. And that is for the retail. For the qualified institutional buyers, they will give a bid. Finally, for everybody, there will be a price band within which you will have to apply. Just check up. Maybe that has also been released already and maybe you can look at it. Anyway, good. That's good of you to do it. Madhav is here. Kushi, welcome. Now we move on quickly to where we stopped in the last class. We saw the types of prospectus, but we saw red herring prospectus. We saw abridged. We stopped at deemed prospectus. Deemed prospectus, meaning, what is the meaning of the word deemed? Deemed means like or presumptive, or it is not, but it will be treated like. I'm repeating. Deemed means it is not, but it will be treated like. When something is deemed to be something, it is not that, but it is like that. It is treated as that. For the legal purpose, it is treated. Now, section 25 says a document containing offer of securities for sale will be deemed a prospectus. So this is not an offer, or it is not an invitation given by a company for allotment of securities. This is an offer for sale issued by somebody. So Mr. A has been allotted shares. A is now offering, or A Limited has been allotted shares. A Limited is now offering these securities for sale. See, for example, I'm having shares of so-and-so Limited. I'm saying I have got about 5 lakh shares. Anybody interested can come to me. I will sell. Maybe at this price. Maybe I will even give some information about A Limited. So company is like this, like that. What is the problem here? That document may contain misleading statements. So they say such a document which contains offer of securities for sale will be deemed a prospectus. It is not a prospectus, but because prospectus is when you send, the company sends to people saying you apply for my shares. That is the thing. But this will be deemed to be a prospectus. That document, that letter, that notice, that circular, whatever communication by which you are offering securities for sale will be deemed a prospectus, provided 2 conditions are satisfied. We will see that. Only if these conditions are satisfied, these conditions are satisfied, it will be deemed. Even if one condition is not satisfied, it is normal, nothing wrong, you go ahead with what you're doing. Please understand that both conditions are to be satisfied. So, okay. Good. Ms. Rajini, welcome. Thank you for clarifying. So I know that your name is Rajini Singh. Okay. It says the Ravi Singh. That's why I was a little enabled. Rajiv Kumar, your name is Rajini. Good show. Now, the purpose of allotment of securities by this company is with the intention, with a view to all or any of those securities being offered for sale. So the company is allotting these shares only for the purpose of offering them for sale to the public. The purpose of the allotment itself is offer for sale. Now you will tell me, ask me correctly, sir, how will I know, sir? How will I know what is the intention of the company at the time of allotment? Sure. That is why they say, if these two conditions are there, or if these two situations are there, either of them, then I made a mistake. Even if one condition is satisfied, it will be a deemed, not both, even if one, because the word used here is or. If any one of these conditions is satisfied, then the presumption is that the original allotment was made with an intention that it will be offered to public. Presumption. This entire section is based on presumption. Presumption means something which is not there will be presumed to be there. That is why we use the word deemed. Two conditions are there. One of that satisfied also gone. It shall be shown that offer for sale to the public was made within 6 months after allotment or agreement to allot. There need not be a direct allotment. The company can enter into an agreement with the party saying we will allot 5 lakh shares to you. Based on that agreement, this guy goes around offering it for sale. Or the shares are allotted. Pakka, it is in his name now. Now he goes around saying buy. If this offer is made within 6 months after the allotment or agreement to allot, then presumption, it was intended that the allotment was intended for offer for sale. Therefore, that document, that letter that this guy is sending to everybody will be deemed prospectus. Meaning what? It has to comply with section 26 fully. Format, disclosure, consent, misstatement, liability, everything will apply to this document. Okay, sir. It was made beyond 6 months, sir. Then, what is the other point, sir? At the date when the offer was made, the whole consideration to be received by the company in respect of the securities had not been received by it. Suppose these shares are being allotted at 5 lakh shares at rupees 100 each. 5 lakh shares, 5 crores. Now, that fellow, the guy to whom the shares are allotted, has not paid 5 crore. Maybe he paid only 1 crore or nothing. That means even though since 6 months is over, when the offer is made, still at the time when the offer is made, the whole consideration has not been received. Then, so why the company will allot without getting money? Because the intention is that this fellow will offer it to the public, get money, and then pay him, pay the company. Either situation, okay, the company will have that document will be deemed to be a prospectus. Generally, company sends invitation to offer for prospectus, but in deemed prospect, companies directly sends no, madam. Company does not get involved in this at all. There is one issuing house or there is one guy. Usually the merchant, see, the idea is simple. I'll tell you how it all happens practically. Company has got a lot of activities now. So they want to move on with their life. So what this guy says, boss, here is money, take it. I will sell it for you. I will sell it. So it is given. So immediately that guy gives 5 crore. I am having my 5 crore. I allot the share to him. Proceed with my life. Within 6 months, that guy makes an offer. That guy makes an offer. That guy or that company is called, usually it's called issuing house. They are experts in capital market. They know how to market the share. No. So obviously, they will send letters to the public now. The law wants to be careful that that letter, that notice, that circular should comply with the strict rules of section 26 and prospectus. That will also be deemed to be a prospectus. In those days, what used to happen, see, when the company directly makes an invitation to the public through prospectus, it has to comply with all the strict rules. Now, to circumvent this, what some fellows started doing in early days, 50s and 60s, not now, what they did was, they started allotting shares to this issuing house. Then that issuing house will go around sending letters to people privately saying, this company is a fantastic company, invest. So misleading statements could be made. Therefore, they said, look here, if company is allotting shares to anybody, that gentleman or ladies or company is allotting it or offering it for sale within 6 months, it will be deemed as a prospectus. That document should comply. Or maybe it is made beyond 6 months, but at the time when the offer is made, the entire consideration has not been received by the company. Either way, okay? If these any one of these two conditions, I'm sorry, I made this statement both. If any one of these conditions are satisfied, then that document will be called a prospectus. Bhumika ji, have you understood the point? Company does not come into the picture at all. 1. 2. Company never makes an offer for sale. Company always gives an invitation through prospectus. Offer for sale is made by who? By promoter or by investors and all. Offer for sale is made. Please understand. Fundamental first be clear. Then you ask a question. Fundamentally, are you clear? Company first time offer is made. Initial public offer means shares have not yet been created. The prospectus is issued. That is issued capital. Then applications are received. Allotments are made. That becomes subscribed capital. That is the only way company will. Already shares have been allotted to one gentleman. That fellow is making an offer. That is different. That is called offer for sale. Offer for sale, we will be seeing it shortly. Don't worry. So don't use the word offer for sale from the point of view of company. Company will not make an offer for sale. Company will only issue prospectus. Okay. And fresh. That is called primary market. Whereas offer for sale is technically secondary. In as much as the shares have already been created. They have been applied for, allotted, now available. At the time of public issue, the promoter or the PE fund, private equity fund, PE fund, private equity fund will also want to get out. Now, I explained to you the other day. I hope you understood. So obviously, now see, he has invested at a particular premium, waited for 3 years now. That investment needs some return now. And he's taking a risk. So at the time of public issue, they will make offer. That is called offer for sale. That is called offer for sale. It is a concept. We will discuss it very shortly. This is different. This is deemed prospectus. It is this section, 25 is not a new section in the 2013 Act. This fellow was very much there in section 64 of the old law, 1956 law. Very, very clearly, because this problem was there. So there was a situation where company will allot to one issuing house. That issuing house will send letters to everybody. Misleading statements could be there. So they said in 64 itself, 1950s itself, almost as soon as the act was passed, they said, look here, in case you are allotting to somebody and that somebody is offering shares for sale, making an offer to the public or anybody for sale, if that offer is made within 6 months, that document will be deemed to be a prospectus. Or if that offer is made even within 6 months or not, if the whole consideration has not been received by the company, then also that document, that notice, that circular, whatever communication you are giving to the people by which you are offering that sale has to comply with the strict rules of prospectus. 26 will apply. Simple concept. Once you really apply your mind, it is easy. This diagram can also help you. So you have to ask yourself, first question, allotment has been made to somebody. Allotment or agreement to allot. Now, has the allottee or that guy sold shares to the public within 6 months from the date of allotment or agreement to allot? I'm supplying the words because, it's a short form. I'm not giving. Properly, if I say, has the allottee or the other party to the agreement so offered the shares for sale to the public within 6 months from the date of allotment or agreement to allot. But then, I hope you are all intelligent enough to understand. Okay. Yes, the deemed prospectus is issued by the issuing house. The law says this prospectus issued by the issuing house should comply with the rules of prospectus. If this section is not there, what will happen? That issuing house will put any nonsense in that letter. This is a great company. Within 5 months, your money will be doubled. All sorts of false and misleading statements can be made in that document. To prevent that, they say, if one of these two conditions satisfied, then that document will be deemed to be a prospectus. So question you have to ask, has the allottee sold the shares or offered the shares for sale to the public within 6 months? Yes. If the answer is yes, straight away it becomes a deemed prospectus. First condition itself satisfied. Straight away it becomes a deemed prospectus. Am I correct? Simple. This condition is satisfied straight away. Oh, the answer is no. Then, has the allottee paid full consideration to the company before offer for sale to public? Now you say no, then second condition is satisfied. First is not satisfied, but second is satisfied. No. In this case, both are satisfied. So it comes here. You say no there, come and escape here. Again, you say no here, then you come here. So you escape one condition, you get caught in the other condition. Either way. The first condition itself is satisfied, straight away deemed prospectus. Suppose this condition also you have escaped. This condition also you have escaped. Here you are saying no, I am not making the offer within 6 months. Here I am saying yes, I have paid completely to that fellow. You are free, go. This is not a deemed prospectus. Both the conditions are not satisfied, yeah. So that section does not apply to you. You made it within 6 months? No. Have you paid the entire consideration? Yes. Then you are not a deemed prospectus. If any one of these two you are saying no or yes as the case, no or no, then is the allotment made within 6 months? Yes. Then you are a deemed prospectus. Has you paid the entire consideration? No. Then you are a deemed prospectus. Simple check. Easy to understand, I hope. Unless you have made up your mind to get confused. That is your choice. Getting confused is your choice. Being clear is also a choice. It's up to you. Now, the minute you say you are a deemed prospectus, then the provisions of section 26 as to content of prospectus will apply. We saw that now. Consent of expert. Later on, we'll be seeing misleading statement. You will be seeing a penalty for misstatement. That is, in case there is a wrong statement or a false statement in the prospectus, there is a liability. That liability will apply with respect to deemed prospectus. In addition to the other information to be contained in prospectus, this document, this deemed prospectus should also state the net amount of consideration received or to be received by the company in respect of the securities to which the offer relates. For example, this guy the issuing house is getting it at 50 rupees, offering it for sale at 120 rupees. Public will know. Okay. Also, the time and place at which the contract where the said securities have been or to be allotted may be inspected. Suppose there is an agreement to allot. In case there is an agreement to allot, or there is an agreement based on which the allotment has been made, then that agreement can also be inspected. And you have to give the time and place. Anybody can go and see it. Okay. So, in case of firm or company, that's document, that is the prospectus, the so-called deemed prospectus, has to be signed by 2 directors. See, that issuing house could be a firm. Okay, in which case, not less than 1/2 of the partners. There are 4 partners, then at least 2 should sign. Not less than 1/2 of the partners should sign. If it's a company, then 2 directors should sign. Minimum 2 directors should sign the deemed prospectus. Now, my dear friends, if you have common sense, you will understand one thing. After section 25, or after 64 in the old law itself, will anybody want to go for deemed prospectus? Never, sir. Am I a fool? Because anyway, I am going to comply with section 26. Why the hell I will allow to issuing house pay him commission? I will as well go for direct prospectus. Got it? I will as well go for direct prospectus. So the effect of section 25 is that nobody will have issuing house anymore. This concept itself is now gone. No issuing house, no allotment, then offer and all. Why? After all, I have to comply with section 26. As well go for a direct public issue to the public with normal prospectus. So, don't ask me, please do not ask me this question. Sir, has any company issued deemed prospectus? Impossible. Why they will do? Yeah, only fool will do. Because why go through this unnecessary process? Anyway, I have to comply with. See, why did I choose this method? In those days, I thought I could avoid being strictly compliant with section 26 or in those days, section 56. Now you are saying that is same rule will apply to that also. Then only a fool will go for that route. Why? Directly go for prospectus. So if in your mind there is a small question which you want to ask, like, sir, has any company issued deemed prospectus? Please don't ask it, because nobody will issue. Okay, nobody with common sense will issue unless they want to waste time going through issuing house and all. When you can directly go for public issue with the same consequences, there will be no difference. Have you understood deemed prospectus? Okay. If you have understood deemed prospectus, you should be able to give me an answer for this. This is a question based on deemed prospectus. So read the question and give your answer. Capricorn Limited allotted 1 crore shares. Am I correct? 10 million. 1 crore. Shares of rupees 10 each to Silver Tongue Financial Advisory Services Private Limited. See, this Silver Tongue Financial Advisory is a kind of issuing house. They have knowledge and all that. See, nothing wrong in issuing house. In those days, in Britain, that is how companies were running. In those days in Britain. See, in UK, this is where all started. Now, in UK, the promoter, he will have a project. He will go to the issuing house only. He won't go to the public and all. And he will go to these guys and they will go through the prospect. They will go through his plan, project and all. And they'll say, hey, looks good. You want to have an expedition to Argentina. I'm talking about what? Charles Dickens, Victorian era, pre-Victorian era. When they were exploring the whole world, they were trying to find a trade route to India. Some of them came here, others went. Various parts of Far East they went. So Argentina was also a major area, but unfortunately the British did not get a chance to get into Argentina. In the meantime, Spain had come and Portugal had come. Spain had come in a big way, but still this guy goes and says, I'm going to Argentina and I've already been to Argentina. I've located a silver mine. I know where it is. I have staked it. I have purchased the land also, or rather I have an agreement to buy the land. Nobody can buy it. So everything he proves. Then that's good project. Because once the silver mine becomes operational, silver will come to England and that will have huge profit. So it's a good thing. Now he says, I need money very urgently. When do you want to leave? I want to leave in another 1 month. I have to leave because otherwise everything will go. How much do you need? I just need about 5,000 pounds. Take it. They give it to him. Then this issuing house, they will prepare the document and they will go to their investors. And they will collect together investors. They will allot. Then 1 or 2 years later, 1 year later, accounts will be presented. The silver mine will become operational. Dividend will be declared. Nothing wrong. It's only when this system is misused by people. See, when genuine good people are there, no problem. But when the same concept is misused, there is no silver mine. Simply lie. And you prepare a prospectus or you prepare some document saying Argentina is a great country. It is called Argentina because argent in French means silver. So you will get silver. All some donkeys will believe it. And they will give money. To prevent that, they said, this document should be compliant with Prospectus rule. That's all. Okay. So, now tell me the answer. Capricorn Limited is allotting 1 crore shares to Silver Tongue, 10 rupees per share. Premium 25. So totally 35 rupees to be given. On 5/2/2020, they did this. Capricorn Limited was paid the entire consideration of 350 million or 3 crore 50 lakhs on, 35 crores on 15/2/2020. 15/2/2020. Silver Tongue Financial Advisory Services Private Limited made an offer of the shares allotted to them to the public on 1/8/2020 by sending an offer letter on their letterhead, making tall promises about the future performance of Capricorn. Is this letter of offer to be deemed to be a prospectus? Yes or no? And so first give me an answer for that. Will your answer be different if the offer is made on 15/8/2020? If you have understood, you should give the answer. Because the whole point of understanding is you should be able to give answer in the exam. Beautiful. Darshan is giving a nice answer. Rajni, yes, it's a deemed prospectus within 6 months. Yes, yes. Bhumika says not deemed prospectus. Which one? The first one or the second one? The offer which is made to the public on 1/8/2020. Wow, rule section 26(1) rule. What is that section 26(1) rule? What's this? Deemed prospectus is section 25 now. Correct. See, Darshan's answer is nice. Also, Rajini. Little more elaborate. It is a deemed prospectus as it fulfills or as it has fulfilled one of the conditions. One of the conditions. See, when you say one of the, you're talking about more than one condition. Na? So, two. So, therefore, conditions. One of the conditions. Unfortunate English. Unfortunate English grammar. Okay, so you're saying one of the, that means two. Two means plural, na? So one of the conditions. It cannot be one of the condition. This is unfortunate. Many schools, they don't teach correctly. So the minute you see one, you think it's singular. No, sir. One of two conditions, na? So two conditions, na? So one of the conditions. Okay. So it is a deemed prospectus as it has fulfilled one of the conditions of 6 months or whatever you call it. Because the other condition is satisfied. See, if you go through this, first question, has the allottee sold shares to public within 6 months? Yes, straight away deemed prospectus. You don't have to go through the other point at all. That is, as the allottee paid full consideration. It so happens in this case, full consideration has been paid on 15/2. Still, it is deemed prospectus because the offer is made within 6 months. Right? Also, in case the offer is made on 15/8, what will happen? Full consideration will be received. The offer is not made within 6 months. 15/8, 6 months over. No. And the full consideration has been received. Yes. Then it is not a deemed prospectus. This type of flowchart approach to knowledge learning, especially in theory subjects like law and auditing, is very useful. Using it, intelligent students use flowcharts and pie diagrams and diagrammatic representation. Relationship diagrams are very useful. In my related party, I might have given you relationship diagrams and flowcharts. These are all very useful in learning theory subjects, especially law, auditing. When there are sequence of thoughts, there's a flow. Then instead of mugging up from the book, you can create a flowchart and remember the flowchart. But do not reproduce the flowchart in the exam. This flowchart is not meant to be reproduced in the exam. This flowchart should be in your brain so that when you see the question, automatically the flowchart will come, you will apply and you will get the result. It is an algorithmic procedure. Okay. Do not reproduce the flowchart in the exam. Use the flowchart to remember the concept, write the answer correctly, get 80% of the marks which are in it. For example, if this question is given 4 marks or say 3 marks, Darshan will get 2. How he can get 2.5? I will tell it later. Can he get 3? I doubt. Nobody will give 100 on 100 on all. This is not university exam, Baba, or your +2 or your PUC exam where you get 100 on 100 in commerce, 100 on 100 in economics. Not possible. Okay, not possible. Maybe the one that extraordinarily brilliant answer, pakka, properly written with good handwriting, then also. Okay. Good. The answer will be the same. What is the original answer, Mayurji? Yes, the offer letter will be deemed as. How it will be the same, Baba? Because in the second case, what happens? Now, both conditions are not satisfied. It is made beyond 6 months and full consideration has been received. Therefore, it is not a deemed prospectus. Kushi, you may have to re-look at your position. See, now you are able to understand now. You are looking at the question, giving wrong answer. Very dangerous. Maybe this is what you all have to practice. Reading the question. See, in the first case, what is happening? You are making the issue on 1/8. The shares were allotted on 5/2. Count the number of days. You will find 1/8 is within 6 months. One condition satisfied. Therefore, the document issued on that letter of offer issued on 1/8 is a deemed prospectus, even though the full consideration has been received on 15/2. But the second offer, which is made on 15/8, suppose the offer is made on 15/8, what happens? 6 months condition is also satisfied. Now it is being given beyond 6 months. Plus full consideration has been received. Therefore, in the second case, it is not a deemed prospectus. Okay. Correct. Now Bhumika has got the correct answer, but I wish, I feel very bad telling this, but would you people like to look at your English improvement? Would you like to do that? I know you are all not, there is no need. You can speak bad English or write bad English, and still, if the points are correctly done, you will get marks and all, but don't depend on that too much. The man correcting your paper may be a purest English speaker like me, and he may not like ungrammatical English. Little bit you improve yourself, it will be good in presentation. Please don't mistake me for telling this. Don't get angry with me. Okay, I know if some of you may get angry with me, what to do. But see, when I was in school, I studied my mother tongue of Tamil and went on to study Sanskrit and then French. Okay, I never studied Hindi. My mistake. Now I regret. Like that, some people have not trained themselves in English. Then what I'm trying to do, I'm trying to learn Hindi. Whenever I go north, I travel across beyond Vijayawada, I pick up Hindi. I try to pick up. My best I'm doing. So all of us have to improve our English. Humble request to all of you. You are all youngsters. I'm 57-year-old man. I hope I have the liberty to tell you. Please try to improve your English grammar and written English. Kyun? Because you are now writing exam, Baba. But later on, when you become, say, deputy manager finance of a large company, you're going to send a mail. There you have to be. See, suppose the other chap, from the other company, hey, what letter, what English this fellow, he's a deputy manager finance, he doesn't know English. Like that, the other gentleman should not feel. For that, at least you should learn English better, is what I would humbly, with folded arms, I'm asking you. Don't think otherwise. Okay. Of course, some of us were lucky. We got convent education. We learned English naturally. I learned English from Anglo-Indians who taught me, who beat me. See, my English teacher in school, 5th standard will beat me. You dirty fellow, don't know English. And that way, today, I can never make mistake in English. We were taught remedial English. We were beaten when we spoke English wrongly. We were beaten, and we were made to study correct English. Okay. No, why should madam, don't apologize to me. Understand the importance of English in your life. That is all. Don't be in denial. Don't think that if I don't learn English also, I can be successful in my life. Don't be in denial. Okay. Either way, don't be in denial thinking my vernacular language is enough. Like the Tamil Valga, Tamil. Yeah, my mother tongue is definitely pure for me. I want it. I love it. I like to speak it. For information, I have learned literature in my mother tongue. And I can quote extensively from Tamil poets. But doesn't mean that I will not study English. Because that is, and I wish I had studied Hindi, because Hindi is a national language. I salute Hindi. I respect Hindi. I fall at the feet of Hindi. But still, try to learn English. Humble request. Okay. So this is the suggestion given to you. Reason, many people have come and asked me later on, sir, I know the subject well. I have studied well. I work so hard. I work 27 hours every day. Okay. I work so hard, but I'm still not able to clear this bloody intermediate, sir. Why? Sorry. Then I go through their paper and I find, hey, this is the problem. Presentation could be a problem. So try to look at it. Okay. So now we move on. We are now talking about variation in terms of contract. Variation in terms of contract. Again, go back to your doctrine of ultra wires. What is that? When you accept money from the public, they are giving the money to you. They are giving the money based on what is stated in the prospectus. So in the prospectus, you have mentioned that your company is going to be engaged in technology and your company is going to be engaged in advanced technology for digitalization of automobiles and electronic vehicles. Fantastic. That is where the whole world is going. Elon Musk, everybody is going there. So I'm so happy for you. I want to invest in your company. I have invested. So happy. Because my goal is I want to invest because I think that is where the future is. So this company will make money because if they are able to find out new methods of electronic cars, digitalization, green energy, solar, whatever, and then mainly digitalization. Okay, then it's a fantastic direction, and I'm happy to go that side. So I'm investing. One second, Mayur Gupta confusing us. Let us see what he's saying. As per the provisions of the Act, if the full consideration has been received, then it will not, as in the given case. Correct, Baba. In the first instance, Mayur, Suniye, listen to me. Don't be negative. Open your mind. Listen to me. On 1/8, what is happening? On 1/8, the full consideration has been paid, but Allotment has sold the shares within 6 months. So therefore, it becomes a deemed prospectus. If you are not able to understand, I have explained once. If you still think you are right, salute you. I will salute you. But what can I do? Who will be the final deciding authority? You understand, Mayurji? This is the problem with CA exam. Students blindly get on to one answer. Without thinking, they hold on to that answer, justify the wrong answer. Don't do that. See, on 1/8, what is happening? Allotment, the offer is made within 6 months from allotment. One condition is satisfied now. So the first 1/8 ka prospectus is a deemed prospectus. But the second one, what happened? It is made beyond 6 months. And the allotee has paid full consideration. So both conditions are not satisfied. Therefore, it comes out here. Has the allotee sold shares to public within the second one? On 15/8, this will be no. Then I move here. This will be yes. I move here. First time, this will be yes now. So straight away I move here. So with this diagram, I think clarity should emerge. Thank you, Mayurji, for confirming that you have understood. Okay. In the exam, be careful. Once you think one route, question that route, examine that route, then again try alternate. Maybe you are wrong. Maybe you are wrong. I know it is impossibility for you to be wrong, but maybe you are wrong. Like that, you start thinking. What do you say? I always think like that. Srikanth, you are a fool. You don't understand. Read again. Maybe your little brain has not understood this question. Not now. When I was 21 years old in the exam hall, I used to think like that. Srikanth, you are an idiot. You are a fool. Just because you got rank in Inter, don't think you are a big shot. You read this question again. Be careful. What is the examiner expecting? What is the law? Have you understood? Like that, constantly I will criticize myself. Once I get an answer also, I will say, maybe that is wrong. Be careful. This type of an approach in the exam, believe me, suddenly you, especially in papers like cost accounting and all, you will go one route now. You will know that you are wrong. Nothing you have to correct. You have to come back and you have to make the correction and rework it again. No other go. So I have done it many times. That is why in cost accounting and accounting and all, income tax and all that, I will never ink my answers. I will always do it with B pencil. I used to use dark B pencil, keep on filling up. Then once I am 100% satisfied that this is the answer, I'll pray to God and put ink. It takes a little time, but that is how you get high marks in the exam. Not by scribbling, writing that, oh, it is wrong, scratching out, again redoing it somewhere. I mean, that way the examiner gets irritated. Don't do this. Okay, these are small tips I'm giving. Mayur, nothing to do with you. My general comments are for everybody regarding how to present theory answers, even for costing. Don't see, definitely see, problem. I have a small catch. You might not have seen it. Suddenly you will see, oh, this calculation has to happen. Then only I can come to this step. What to do? You have to go back and do it. Oh, calm and quiet, you have to go. What to do? To err is human. Perfection is given only to God. Anybody of you, are you God? No, no. So we are all God. We are all ordinary people. God is perfect. You and I are imperfect. Accept our imperfection. You will move towards perfection. Yoga karmasu kaushalam. Yoga karmasu kaushalam. Bhagavan says, you have to constantly move towards perfection. Every day we have to. And for that, only way is ego has to be surrendered. If you think I know, then that moment ego takes over, life goes. The minute you say, I am not so intelligent, but I will do my best. I will do my best. I will read the question. I will understand. Do my best. Just adopt the attitude and see. Now, you don't have to immediately get angry with me. Don't get angry with me. Don't get upset with me for giving all this unnecessary advice. Try this approach. Suddenly you'll find success. How did you get 4 times rank, sir? Like that, some people ask. Not by intelligence, not by studying 27 hours a day, sir. No, sir. By being humble, by understanding and accepting my own imperfection, I moved towards perfection. The minute I say I am perfect and I start moving, I will move towards imperfection only. Okay. This is a thought I will share with you on Sunday morning. Don't take me otherwise. Chalo. Now coming back to the point. So I have issued the prospectus wherein I have stated something about my company's activities. You are investing based on that. Now what I'm saying, originally we thought we will go for electronic digitalization, digital thing and all that. Now we have decided we won't use it for that purpose. Anyway, we are manufacturing car. This money we'll use in our normal automobile business or my truck business. I'm just assuming that Tata is going to do that. Tata will not do that. But if Tata wants to do that, see, why did you invest in Tata Technology? Because you believed that the next generation of cars will be digital, that everything will be electrical. Okay. So, and you know that Tata has a lot of expertise in digitalization. I don't know, maybe they have. And so you want to give the money to them so that they can create. But suppose they finally come and say, after the issue has come, they say, we feel that it's a little thing. Let's see, initially we will use it in our regular manufacturing activity. Now, doctrine of ultra vires. Because you took the money based on one statement. Now you cannot do it for something else. So funds raised from the public shall be used strictly in accordance with the terms contained in the prospectus. There is a prohibition on deviation by way of use of issue proceeds for investing in equity shares of any other listed company. You can't just like that take it and put it in Tata Motors. Or anyway, you can't, because Tata Technology is promoted by Tata Motors. So you can't put it in TCS. No. You took the money from me for doing some business. Now do that business. I didn't give this money to, if I want to invest in TCS, I will go directly invest. Why I will give it to you and you will invest? No. So there is a prohibition. Okay. It's reasonable now. The legal principle involved is the doctrine of ultra vires. The powers are defined by what you stated in the prospectus. And of course, the prospectus should be aligned with the memorandum also. You cannot state some objects in the prospectus which is not there in the memorandum. Okay, that SEBI will not allow. They will first of all verify what have you stated in your project report, what is your object class, are they tallying? Only then they will proceed. So this doctrine will apply. So the doctrine of ultra vires is meant for memorandum, but it will apply with suitable changes here also, for prospectus also. Mutatis means with the suitable changes. Meaning, obviously, here instead of memorandum, we are dealing with prospectus. So, okay, sir, I want to change. I want to do something else. Agreed, sir. If shareholders are okay, you go ahead, sir. How can I prevent you? The guys who gave the money, if they are okay with it, go ahead. So, you want to make variations in terms of any contract mentioned in prospectus or object stated therein. No problem. Call a general meeting, explain the situation to them, and if the members pass a special resolution, we have no problem. Again, special resolution, the number of votes cast in favor shall be not less than 3 times the number of votes cast against, if any. Okay. Then, whatever variation has been made should be published in 2 newspapers, English and vernacular. Do you remember this? Same logic. We saw this in objects. You remember? In case a company has taken money from the public and any amount remains unutilized, do you remember? Then the memorandum object clause cannot be altered unless you pass a special resolution, etc. Same logic. Same. This is the same. That is why they say this will apply mutatis mutandis. In our incorporation topic, we saw this. I hope you remember. So, and you will publish the details. You know why? Because, see, at a meeting of the company, let us say the company has 1 lakh shareholders. At the meeting, only 300 shareholders may come. They may pass a special resolution, which means 1 lakh, 99,700 fellows have not come. Maybe they read the postal ballot form, maybe they did not. Whatever it is, one more advertisement you give in the newspaper. Now, the minute you do that, it will be taken up in the press also. Maybe they will write up and think. So, they will say, hey, this company is harmony. Then one fellow, in the one village, Munna Bhai will wake up. Hey, what is this? I am not interested. So, he is a dissenting shareholder now. If he does not agree, then he should be given an exit option. Do you remember? There was an exit option. Same way here also exit option, meaning he can walk out. Meaning you have to purchase his shares. The promoters or somebody has to purchase his shares. Okay. Any members of the company may in consultation. Okay, now this is over. Now we go on to offer for sale. Again, a very powerful concept. This is offer for sale. Offer for sale will happen along with the public issue, but it need not. You can have an independent offer for sale, but rarely it will be successful. Why? Because that will be seen as an exit route for the promoter. Who will buy? So they will not come. Whereas if there is a good public issue, along with that, some portion of the shares of the promoter is being sold, that is reasonable. Suppose the promoter says, I want to sell all my shares to you, or I want to sell 60% of my shares to public. Great opportunity. Please come and buy. People will say, why are you selling? If it is such a good company, why you are selling? This is a question anyway we have to ask. You understand? If it is such a good company that you want me to benefit, why are you not benefiting? Why are you selling? This question, if you ask anybody, they'll go mad. That is why offer for sale, they will not give entire shares. They will give some portion. Idea is 10% or 20% they will give from the promoters. Why? Little money, let me see. Because the promoter has got confidence that this company will be very successful in the long run. But still, he has struggled so hard for 5 years, 6 years. His family has not got any benefit. Everything has been plowed into this company. Now the company is doing well. Some small amount he wants to take out. Nothing wrong. Okay, nothing wrong. That is done through the offer for sale. Similarly, there might be an investor. Now that investor came with the clear intention of making money. He is not going to be with me forever and ever. He wants exit. For him also, this offer for sale will be a great idea. See, the PE fund, the venture capital fund and all will exit through the offer for sale. Okay. Because we invested 5 years ago. Our goal was not to be with you. Our goal was to initially support you. Now that the company is doing well and the valuation is improved, I want to book my profit here. I'm an investor now. My goal is not to be with you. See, I am investing in Maruti Suzuki not because I want to manufacture automobiles. I am manufacturing Maruti Suzuki because I had disposable surplus, which I wanted to get a good return. I invested at 1,500. Now it's going at 9,800. Maybe I might want to exit now. I can always do this in the secondary market. But here, the law gives one opportunity to the promoters to do it genuinely with open offer and take it. Okay. This is called offer for sale. It's a new provision, not there in the old law. There was no provision for offer for sale in the old law. Okay. If you want to make an offer for sale, you will also come under the concept of 25 only, deemed prospectus only. Okay. Of course, or you may have to come out of it and make any members of the company may, in consultation with the board, offer their shares to the public. So members cannot directly offer to the public. If they do that, that will be prohibited. That is prohibited. Okay. If you want to offer to the public, then you have to go along with the board. So the board of directors only will do it on behalf of the members. So those members who are so offering their shares shall authorize the company to take all actions in respect of the said OFS. OFS means offer for sale. OFS. Obviously, the company will incur money in terms of printing the offer for sale document and all. So that cost will be reimbursed by the members who are offering for sale. Okay. Offer for sale is a fantastic concept introduced for the first time, so that clarity is there about it. Earlier, before the 2013 Act also, offer for sale was there, but there was no provision in the Companies Act, totally controlled by SEBI for public issues. So SEBI decided. Now, Companies Act has also got provision. The document through which the OFS is made shall be deemed to be a prospectus. Same, are you able to understand? And part 1 of chapter 2 shall apply to it. So in every way, the offer for sale will comply with the requirement. Only that provisions relating to minimum subscription and minimum application value do not apply here. If you go for a genuine, normal prospectus, 90% of the issue amount should be received within, I think, 30 days or 60 days. We'll see that. That condition will not apply here. And any other information which cannot be gathered by offeror with justification for non-members. See, in the offer for sale, in the prospectus, we have to give information. Company will have it, whereas the offeror may not have. Or I cannot give it because I don't have such a condition. Then it is exempted. Other than that, all other information in the offer for sale should be the same as the information given in prospectus. The name of the persons bearing the cost of OFS is to be disclosed so that the public will know clearly who is making the OFS, who is funding the OFS, etc. Now 40 makes it compulsory. Very important. It is compulsory. If you have issued a prospectus, then those shares which are allotted on the basis of a prospectus shall be dealt with or listed on a recognized stock exchange. So, if you want to allot shares on the basis of prospectus, if you want to allot shares based on prospectus, application based on prospectus, then before allotment, you have to get your shares listed or dealt with on the allotment. So, application shall be made to one or more stock exchanges and permission obtained for the securities being dealt with therein before making public offer. First, you have to go to the stock exchange. They should agree. Once your prospectus is issued and shares are allotted, we permit them to be dealt with. For that, there is a whole procedure. That's why, public issue of shares, the two IPO by a new entrant into the market, it's a very complicated thing. On the one hand, prospectus, MCA, SEBI. Along with that, if you are having offer for sale, then offer for sale also. Then you have to apply to stock exchange. Then once you go to stock exchange, there will be listing agreement. In India today, we have only 2 stock exchanges. Earlier, you had, I think, 24 or so. You had regional stock exchanges. We had a stock exchange in Madras. They are still there, but not active. So the 2 active stock exchanges where continuous trading is happening at volumes are National Stock Exchange, NSE, National Stock Exchange, and BSE, Bombay Stock Exchange. Not MSE, not Mumbai Stock Exchange. Still called Bombay Stock Exchange, BSE. Shares listed on BSE, the maximum traded shares with market capitalization or an average is taken, and that average, moving average, is called Sensex. Similarly, for NSE, you have what is known as Nifty. Okay, 50 shares are taken and the maximum, that is those shares which are actively traded and their market capitalization is taken and your calculation is made and the weighted average is taken and that weighted average is continuously published. This information is called index. This is called an index. It's sort of important. Means the index will give you a general indication as to whether the market is buoyant, whether the market is going up or down like that. As of now, the indexes, I don't know. If you ask me what is the exact index, I don't know. I don't care. Some people will watch only index, as if that will give something. It's general indication. Generally, trend is of late, it is going up. And my prediction, I'll tell you today, by 27, it will be extremely high. By 25, 26, it will be huge. Where it will go, I am not a fool to make predictions. Okay, only a fool will make prediction where the Sensex will be in 2025 or where the Nifty will be in 2025. But I will assure you that there will be a good growth in Nifty and Sensex. Buoyancy will be there. By about 26, it will reach its peak. 26, 27, it will wobble. 28, it will fall. This assumption I can tell you, but exactly how much it will be today, how it will be today, I am not a fool. But trend, I will say, for me, it is more than enough because once it reaches a certain level, for me, it's a peak. I feel that it is the peak, I'll walk out. I will not wait for that one extraordinary apex moment when I've reached. Even if it is on, according to me, a little high, I'll say enough is enough. And like Alibaba, I will wrap up my thing, put it on the donkey and come out of the cave with my money and lead a happy life. Unlike Qasim, who stays in the cave. Remember in the Alibaba story, greedy fellow, he stays in the cave. He keeps on grabbing this, grabbing that. Suddenly the cave closes and the thieves come and they kill him. This is what happens to many stock market investors. There's one moment when you know it's safe to go. At that time you go. You take your riches, you take your money, go out. Otherwise, you're out. I can give you 100 examples of people who stayed in the cave thinking that the market will still further go up. It will collapse and they will be caught high and dry. Okay, so this is general awareness I'm creating for you. So good. So application should be made. Prospectus shall state the names of the stock exchanges, and till the permission is given and listing is given, allotment cannot be made. Issue proceeds shall be retained in a separate bank account and shall be used only for adjustment against allotment, where the securities have been permitted to be dealt with in the stock exchanges. And in case for any reason that stock exchange refuses to deal with the securities, then the entire money received should be refunded or repaid. Got it? Unless, because the whole point of public issue is I can sell it freely in a market. If that listing is not there, then the public issue is out. Therefore, listing agreement becomes, getting listing is very important. And the shareholder also, in the prospectus, you cannot say, I am aware that there is an application has been made to so-and-so stock exchange and you are hopeful of getting it. In case you don't get it also, I am willing to take the allotment. No. Such a waiver by the applicant will be void, shall be void. It won't apply, ma. You will have to refund the money. So you take the money from him on prospectus, keep it. It cannot be used. Once the listing permission is given and the shares are listed, then only it can be adjusted against the allotment. Got it? Then you can utilize. Because now that fellow can also sell it in the market. Till then, his money you cannot use. See, I'll tell you, these are all very powerful sections. Very, very good. Any default, 5 lakhs to 50 lakhs fine for the company. 50,000 to 3 lakhs for the individual. Imprisonment was there before, now they have removed it. See, in 2020, what they did, they decriminalized the Companies Act. Decriminalized because they felt too much criminal, penalty, imprisonment penalties are there. So they said, let us decriminalize the Companies Act. So all the punishment by way of imprisonment was removed. Wherever it is removed, I'm showing you. Here's the question, because nobody has put any comment or anything, no questions are raised. So I'm getting worried whether you are there or not. So therefore, I am raising a question. We'll have a break, not now. The time now is 8 o'clock. We started at 7, only 1 hour over. So around 7:15, I'm sorry, around 8:15, I will give you a break. Okay, 8:15, I'll give a break. Don't worry, there will be a break, but not now. So answers. ABC Limited issued a prospectus in April 2020 for public issue of shares. It had applied for listing of shares in 2 recognized stock exchanges. Both of them have given permission for listing in June 2020. See, can the company proceed? Correct, Mr. Thakur. Where prospectus is issued, your statement will be reworded by me. Listen to me. Where prospectus is issued, allotment cannot be made if listing is not obtained. So don't say where allotment is done, because allotment cannot be done unless you are getting listing. Until you get the permission, you cannot list. So if you have not got the permission, you cannot go for prospectus itself. See here, they are getting permission in June. So allotment, no, you have to refund it. Again, go for public issue and get the money back from them. Okay. So first you get the permission from the stock exchange. Only then you can issue prospectus. So everything will happen simultaneously. On the one hand, we'll be giving to SEBI for vetting. On the other hand, we'll be filing with ROC. Then we'll also go to the stock exchange and get permission. Then we get permission from stock exchange. We will mention that in the prospectus. Again, SEBI. We will mention it, but SEBI won't give their chop unless you show the permission from the stock exchange. Otherwise, the prospectus issue itself cannot be issued. Of course, in this problem, we are assuming that SEBI has given permission. They won't give. The company can't proceed for allotment as the permission for listing has been granted only after the issue of prospectus. Beautifully stated. Absolutely correct. Okay. So if you have not obtained permission, then you cannot. One thing could happen. The stock exchange could give you permission before prospectus. Subsequently, before allotment, they may withdraw the permission. If so, also you cannot make allotment. For some reasons, they might decide that you are not. Some information may come. See, after all, it's not only documentation and procedure. Yeah, reputation is also there. Known for a fellow, his past about him. So that could change the opinion about him. Whatever you might say today, once upon a time you did a fraud now. That is, the reputation is there. That reputation has to be seen. Okay. Now, I'm sure you are familiar with this topic. In accountancy, you would have studied it. In +2 itself, you would have studied it. Or maybe in college or whatever. So quickly, I'll run through it. Basically, when a public issue is made, it is the hope of the company that the entire issue will be subscribed. It is the hope of the company that the entire issue will be subscribed. But in reality, there may be oversubscription. Excellent. Means I offered 5 lakh shares. Public applied for 10 lakh shares. Oversubscribed 1 time, 2 times, 15 lakh shares, 2 times oversubscribed. Can happen. Or the other side is also there now. I issued 5 lakh shares, only 3 lakh applied. This is called undersubscription. Now, when there is an undersubscription, there is one more danger. Later on, you will see that unless 90% of the issue amount is received within a certain period, minimum subscription, you cannot make an allotment. So how to make allotment? Therefore, to be on the safe side, a company may decide to employ underwriters. So who is the underwriter? Underwriter is like an insurance company. The underwriter will say, if there is an undersubscription, if the shares offered by you through the prospectus are not subscribed, we will take those shares. That is called devolvement. D-E-V-U-O-L-V-E-M-E-N-T. Devolvement. In case there is an undersubscription, to the extent that the underwriters have agreed to take, they will be taking the share. They will pay the money and take. Of course, chances are the public issue may go through, shares will get listed, and market may give a good premium for those shares. In which case, the underwriter will actually make money on those shares. But the other side is also there now. He may take the share, Market may not like this share. So maybe it is issued at 300 rupees or 320 rupees. First day listing itself, it's going to 270, whatever. So the underwriters have to take the risk. It's like insurance. So because they are taking the risk, they have to be paid something. So on the entire amount underwritten by them, on the value of the shares which they are underwritten, the price means 10 rupees face value, 290 rupees premium, or 310 rupees premium. Now that is why 320. So that 320 on that amount into the number of shares agreed by them, they will get whatever commission you have agreed. They will be entitled to commission. So in case there is if there is no devolvement, fully subscribed or oversubscribed, that entire commission goes to the pocket of the underwriter. But if there is a devolvement, then whatever loss he is incurring on the shares, if any, this amount has to be adjusted. Okay. Usually underwriters are big brokers. They are also big brokers. Okay, Mandi Walas or Teji Walas sitting in the Mumbai Stock Exchange, Bombay Stock Exchange. They are big shots. So they will come and say, okay, they will study the issue, see the probability. Okay, it's not a big risk, so I will take. But if they see some Ganda promoter, useless fellow, useless guy, suddenly trying to cheat the public, they say, we will underwrite Baba, but this is the commission, because they know there might be a devolvement. Whatever it is, commission shall be paid on the price. The percentage shall not exceed 5% of the price. 5% is the maximum, or a rate authorized by the articles, whichever is less. So if your articles of association has got 4%, then the percent you can pay only 4%. But if your articles are silent, then 5%. Your articles are 6%, sorry, you can pay only 5%, whichever is less. Usually nobody will pay 5%. If you are a CFO and if your company wants to underwrite, you will call 5 or 6 brokers, or maybe 10 of them, call them up, go with them to Taj Coromandel for lunch, one by one, or you will call them to your office, give them a cup of tea, and you will give them the prospectus. They will also know. So the minute this is that, they will call you. You have any underwriting requirement, we will come like that. Negotiate. Say, he will say 3%. Hey, forget it. We can't pay 3, 2.5, 2, whatever. Negotiation. So that is also done. So whatever it is, no company will pay 5%. They want to pay less now. See, your goal as a CFO should be or would be to reduce the cost of issue. Now. So that will be one of your challenges, how to reduce. And suppose you are successfully running a public issue for a first time initial public offer for a small and medium enterprise, moving out of its thing into public issue. If you are the CFO who did it, or even if you are assisting the CFO who did it, your career is made. On that basis alone, your prospectus, that is your biodata, will move. On LinkedIn, if you just put it there as one of your skill sets, I have taken so-and-so company, or I have taken company for public issue. When they are looking for that profile now, that's it. You will be straight away hired. For that, you have to work. You have to work in a company, help that company to grow, take that company to public issue. I have seen a lot of CFOs who did that. Members of our institute, company secretary, come CA. I know. They have taken company to public issue. Then they'll go to some other company with higher position, better position. That company they'll take. Then 2 or 3 companies, when they do now, they become consultant. They won't, thereafter, they will never be employed. They will become consultant. They will start their own consulting firm, a financial consulting firm, and they will start doing syndication and public issue. That's a different story altogether. This is one career option. See, again, remember, there is no certification program for this. There is no diploma. There is no way you can get a piece of paper and get into this. You have to work, see the opportunity, keep alert, move, have a good mentor. Your CFO, senior CFO should guide you. Then be with him for one public issue, learn, then move to another company, another public issue. Like that. That is how careers are built, sir. Not by getting diploma or certificate. No. Become qualified as CA, then start working. And during the work only you will learn. Okay. Many students today think there is some certification course for this certificate. Yeah, you can learn and get a certificate, but that won't get you the job. Experience only will get you the job. Am I correct? So it's always a dilemma. I don't have experience, how do I get it? So best thing is go and learn. Go and be a chela for somebody who is already doing it. Little bit of time you give, he will promote you or you will learn. Then you go on your own. This is how practically people have done in CA, in legal profession and all. Only, those who want to sit under the mango tree and expect the mango to fall in their lap, only they will say, sir, is there a certification program I can do for becoming investment banker? Nothing. Work in an investment banking company from starting position, struggle hard, prove yourself, promoting, come up. That is how careers are built. I know what I am telling will be very disappointing to some of you, irritating to some of you, but that is the hard reality of being a successful professional, sir. If you know, if any other examples, sir, I would like to know. None. Okay. Through hard work only we have come. Not by some piece of paper that somebody gave. That paper, if it can get me a job, then everybody will get it. Then why everybody has money? Any fool who has money can get that certification. Then, no, sir. Beyond that. Same way for debentures, there is a percentage. For debentures also, you can go for an issue. There you have to restrict to 2.5% or articles, whichever is less. The company can't proceed for allotment as the permission for listing. You got the answer right. Moving on. So underwriting commission, you should disclose it in the prospectus. Where the shares are taken by the promoters, no commission can be paid. Where it is not offered to public, where it is privately placed, no commission can be paid. The copy of the underwriting contract for payment of commission should be delivered to the registrar along with prospectus. Now we come to the topic of allotment of shares. Allotment. And before I start the topic, let us have a small break. Okay. Time now is about 8:14, maybe 8:13. And we'll go till 8:20 break. Till 8:20 break. Sir, break, sir. Welcome back from a well-deserved break. I'm sure you had, of course, you might not have had time to have your nasta or breakfast, but definitely you might have had a cup of tea or whatever and go on. So we move on to the next topic, which is allotment. See, remember this chapter is called Prospectus and Allotment of Securities. So now we come to allotment. Friends, it's a slight legal point. Long ago, I do not know how long ago, you studied Contract Act. That is Basics Contract Act. Maybe in college or for foundation or whatever. There you were taught offer and acceptance. Am I correct? And there you were told, and I hope you were told, an offer should not be confused with an invitation to treat. An offer should not be confused, or offer is not an invitation to treat is not an offer. Please remember, the prospectus issued by the company is not an offer under the Contract Act. It is only an invitation to treat. Now, allotment is the appropriation of certain number of shares. 1 second, please. Srija, class la irukken.
Okay, pa.
I'll call you back at 9 and 9:30.
Ah.
I'm so sorry. Darshan, your question is a very good question. I have no answer for it. I am not able to think of anything. See, there may be certain information that the promoters have to give, which normally has to be given in prospectus, which may not be available to the promoter or may not be. I'm seriously not aware of it. I'm humbly begging you to permit me not to give an answer. 1. 2, again, knowing that will not make you perform better in the exam. But not knowing something very fundamental will affect you. So don't worry. It's a small matter. What is that matter and all? Don't worry. Means, offhand, I will tell you my view, ma. If you like it, you take it. Otherwise, you leave it. There could be something that is required in the prospectus, compulsory per prospectus, but it may not be applicable to these offer for sale walas. See, for a company, there may be certain matters which can be given by company, but for these fellows, it may not be available. So you can like that. That's all. Other than that, don't break your head. See, if you break your head over that small unnecessary issue, there are so many more important things to be remembered and known. Please try to concentrate on that. Okay. This is my humble view. My respectfully submitted to Mr. Darshan. Don't get angry with me if I tell like this. Okay, coming back to the allotment of shares. Now, when the company is allotting shares, there is an appropriation or adjustment of a certain number of shares out of the hitherto unappropriated capital. The authorized or nominal capital has not been appropriated towards anybody. It is there. Who owns it? Nobody owns it. But once allotment is made, the allottee becomes the owner of those shares. So that is called allotment. Please note, when the prospectus is issued by the company, there is no offer by the company. The application is not an acceptance. The application made by the subscribers, that is the offer. Allotment by the board of directors is the acceptance. So until the allotment is made, contract is not complete. So offer by member, by the applicant, by giving application, offer is made. Allotment by the board of directors, acceptance, contract. Between the company and the shareholder and the shareholders is the same. That is why this was laid down in a case called Ramsgate Victoria Hotel versus Montefiore. Maybe you studied it long ago in your college, or maybe you remember it. I don't know. It's a good case. It's more of a legal principle that you have to understand, right? So, application is the offer. Allotment is the acceptance. Allotment should be done only by the board at a meeting of the board. It cannot be done casually. The CFO cannot send a letter hereby allotted. No. Allotment should be done by the board. Or in large listed companies, there will be a separate share transfer committee or something. The committee can, but finally it has to be approved by the board. The board of directors have to give their consent, okay, for the allotment shares. Now, minimum subscription. Currently, it is 90% of the issue size to be received within 30 days of issue of prospectus. So, if the issue is 5 crores, 90% of that, meaning 4 crore 50 lakhs, should be received within 30 days of issue of prospectus. If the minimum subscription is not received, you cannot make an allotment. You have to refund the money. And the application money shall not be less than 5% of the nominal amount. Suppose the nominal value is 10 rupees, the application money should be at least 1 rupee or 50 paisa. It should be not less than 5% of the nominal amount. But believe me again, today, the rule is all shares are fully paid. When the public issue is announced, they want you to pay the entire amount with premium. This, whatever you studied in Shukla and Graval, whatever you studied in Haral Gupta, broke your head. Share application money account data, 2 share capital, bank account data, 2 share application money, 2 share allotment money, how many shares, what is the excess subscription, how much is being adjusted against allotment money, all that confusion. Then share call money, then call money account data, 2 share capital, bank account data, 2 share share call money. Call scenarios is there. Then forfeiture of shares. Share capital account data to share capital account data to share first call account to forfeited shares account. I'm sorry, I'm giving you all the journal entries. All those journal entries, in reality, we will never pass them. No company, because today straight away public issue fully paid. Entire amount is received. Any amount received in excess will be refunded. That's all. You can't adjust against it. The entire money you are getting, balance money you refund. Over subscription means nothing you can do. You can only look at all that money in the bank account and then refund it back. That's all. It is all done by SEBI in a very, very controlled way. It is not as if that over subscription can be used by you for 15 days. No. If you touch it, you are gone. If you touch it, you are gone. You should not touch it. It will be kept in a separate escrow account till allotment is made. Only after. So listing should be there. Permission to list him. 90% of the issues I should be received within 30 days. Only then you can go for allotment. On allotment, take the money. Enjoy. I mean, to the extent of the subscription. Balance, refund. It will all be done automatically by the bank, yeah. Because once you open a DP account with the bank now, without DP account, you cannot apply for share. Shares are going to be in dematerialized form. Once you open a DP account, there will be a linked bank account. You will make your payment only through the linked bank account. You cannot make it through any other bank also. The DP account card linked bank account only, you can make the payment. That refund will come directly to that account only, no other account. So that bank account becomes very, very important for you. Okay. That bank account is very, very important. And you have to, one second, I don't know where I lost your query pad. One second. Give me 1 minute. Once again, I'm going to your query pad again because I need to, I somehow closed it off. So basically, you need to comply with listing. The listing should be, the listing permission should be received, and then the minimum subscription should be received. Only then you can go for allotment. Hey, sorry, I'm so sorry. Yeah. Got it. Okay, Jasprit ji, very welcome. Nice to know that you are attending from the beginning. Now you can start messaging. Yeah, see, all this share application, first call and all were relevant once upon a time when partly paid shares were there. But today, I'm not saying they are not relevant. I'm saying most companies do not issue partly paid. But private companies may do it. I don't know. If you want, you can. I'm not saying that is not important. I'm saying so much elaborately we used to study. Now, in reality, it won't happen. But one company in 2020, one company issued partly paid shares. One company issued partly paid shares. Okay. And those partly paid shares are traded on the stock exchange. Partly paid shares of that company are listed and traded on the stock exchange. Anybody can tell which company? In 2020, during peak pandemic, they came out with a public issue of, not a public issue, they came out with a rights issue. Okay. And that was partly paid shares. Which company? Those partly paid shares are traded currently on a stock exchange. Which company? I can tell you one thing. It is my favorite company. That you don't know which one it is, but it is my favorite company. Which company is that? It came out with the partly paid shares. Still not called up. Only 25% has been paid up. Balance 75% yet to be called up. Not called up also. Okay. When I come to rights issue, again, I'll mention that example and I will tell you something. But right now, which company issued partly paid shares? Otherwise, rarely you will see partly paid shares. Rarely you will see partly paid shares. Rarely, or the last 20 years, I have not seen partly paid shares except this one company. In 2020, they came out with the partly paid shares. Correct. Reliance. Absolutely. Yeah. You will obviously have to get it from Google only. That much if you are capable of doing that, you are highly intelligent in today's world. Because imagine, as compared to one man or lady who is able to get from Google versus another gentleman who is not even able to do that. Yeah, Reliance. Absolutely correct. My favorite company, Reliance Industries Limited, not this fellow Anil's group. Mukesh's group, original Dhirubhai group, Mukesh group. My favorite company, that is Reliance Industries Limited, came out with a rights issue for the purpose of repaying their debt and making the company debt free. And Jio also, they had a lot of debt for Jio. So that company is now, see, that Reliance Industries is holding Jio, Reliance Retail, Energy, of course, okay, Petro. So many divisions are there in that one conglomerate company. Currently quoting at our 2,700 rupees or so. My cost of Reliance, the purchase price of Reliance, 0. Yeah, because of various bonuses, and then thanks to Anil Ambani, who came out with those 4 companies and gave me 1,000 rupees bonus. Straight away he gave me. I sold all his shares, got the money. My entire cost of Reliance became 0. So anyway, so that is one example where partly paid shares have been issued. I'm not, if I tell you that, those entries are all not, but the type of hype that's given for that chapter 9 accounting topic, the real life it will be. Similarly, partnership, gaining ratio, sacrificing ratio, blah, 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 all sorts of things. When I started practice, if partners are coming to me, sir, we want to reconstitute the firm, go ahead and reconstitute. Sir, I want a gaining ratio of 1/18. I said, look here, why you want gaining ratio 1/18? You do what I say. The number that I can, because I am the auditor, you do what I say. You don't decide Abdul, Muhammad and Rahim. Rahim gets 1/18 gaining ratio. Muhammad gets 1/16. What nonsense, yeah. If I am the auditor, I'll say, why 1/18, 1/16? You do what I say. Half, 1/3. That is easy for me. Like that. Yeah. Jasprit ji, you don't have to think. You can go to Google and know. Okay. Already Darshan has gone to Google and found out Reliance. Yes, Reliance is there. Good. Other than that, rare. I have not seen. No, I'm not saying it cannot happen. I'm saying it is not happening. You understand now? See, I might say this is normally not done. That doesn't mean it will never be done. Normally not done. The probability is very low. That's all it is. But still there's a good probability of one company. Chalo. So, return of allotment should be filed in form PAS 3 with the registrar. Where shares are allotted for consideration other than cash, the copy of the relevant contract is to be attached. That is rule 12. Wherever it's for other than cash. See, when you're not taking money, but rather that person is giving land or intellectual property right, there will be an agreement with him now, contract. That contract should be attached along with the prospectus. So allotment of securities, quickly summarizing the thought process. Minimum amount is to be received, that is 90% of the issue amount to be received within 30 days. Application money should have been paid and received by the company. Application money should not be less than 5% of the or such other percentage as specified by SEBI, currently 5%. Now, if the minimum amount is not subscribed and application money is not received or application money is not received within 30 days from date of issue of prospectus or extended period if any. See, minimum subscription is not received. You go to SEBI, fall at the feet, give a letter, exceptional situation. They might get exception, say, okay, another 15 days, take it. Whatever it is, within that period, if the minimum amount is not received, that is 90% of the issue size is not received within 30 or extended period, then amount received shall be refunded within 15 days from the closure of issue. So if you're not getting listing, refund the money. If minimum subscription is not received, refund. Within 15 days from the closure of issue, it has to go back to the bank account. If you keep it, then in case of default, then company and every officer shall pay penalty, 1,000 rupees for each day or rupees 1 lakh, whichever is less, right? But see, this is penalty government will get. I am the guy, my money you are keeping. What will I get? For that they say, if minimum application has not been received, then the application money shall be repaid within 15 days from closure. If it is not so repaid, the directors of the company who are officers in default shall jointly and severally be liable to repay that money with interest at 15% per annum. Please note it. Company will not pay. Why should company pay? Whose fault is it? It's the directors. They have to pay. And officers in default, be careful. Officer in default includes company secretary. I always take great pleasure and sadistic pleasure in telling company secretary. Because these fellows only wanted KMP now. They were celebrating breaking champagne when they got KMP now. For every time I read officer in default, I'll say company secretary also included. And CFO included. So, everybody has to come jointly and severally pay. Okay, suppose you are the company secretary and you find that the company is not repaying the money and violating, then better resign and send a letter to SEBI and MCA very clearly saying, I have done my best. I sent a mail. They are not listening. That way they will let you go. If you are honest, they will let you go. You say, I did my best. They are not listening. How can I pay? I am an ordinary company secretary, chartered accountant, earning a small salary. How I can repay? I can't. So that is how it is. If you are honest, or the minimum what you need to do, send a mail to the board of directors, copy to MD. The issue has not been fully subscribed. We have to refund that money on such and such a day. In case we don't do that, 15%. That itself is a defense. Because at least you inform the management now that this is there. If the minute you send a mail like that, they will dismiss you. So anyway, before that, you resign. That's all. The application money to be refunded shall be credited only to the bank account from which the subscription was remitted. You got it? So that is resumed into the DP. Once you open a DP account, automatically bank account will be locked. Now we move on. When there is no undersubscription, means when there is oversubscription or exact amount is received, then whatever commission underwriter is receiving will be income for him. He'll enjoy. Like insurance commission, insurance premium. Suppose you pay insurance premium, vehicle is not having any accident for 365 days, then the entire premium is income for the insurance company. Same way, underwriting commission will become income. Suppose there is a devolvement, suppose minimum subscription is not received, then to the extent he has agreed, he will take it. Then what could happen is there could be a loss arising on account of sale of shares. Now, that amount will be lost. To that extent, the commission will be not earned. Yeah, if you are running your own business as a director, you would be a KMP. Okay. So what is the bottom line lesson I am getting out of this is, whenever, whether you are a owner of a business or whether you are an employee of a business, advisor, consultant, please educate and comply with the law. Do not violate the law. This is my compliance is the king. Okay, non-compliance are trying to do all nonsense and trying and all. In the long run, you will only end up with problems which are not worth it. Or that Mercedes-Benz car or that BMW or the Audi car that you are driving, that palatial bungalow that you are having, nothing is worth the shame finally of that. If that wealth is earned by a proper way, good. But if it is earned by non-compliance, helping people to cheat, it's not going to help you at all. This is my humble submission as a senior person who has run his practice and who has run his life absolutely per compliance, including my companies, where I am a director of a company, like a consulting companies, where I am director, service, those days service tax, now GST. On the dot, 19th of the month we pay. TDS is deducted, we pay. Income tax we pay, advance tax on the due date. Not a pie I will cheat. Nothing will be claimed that cannot be claimed. Okay, I'm not joking. Every pie I pay tax. I don't cheat. Never I will cheat. All compliances under all laws are complied with. PF, ESI, everything complied with. I'm peacefully sleeping. Okay, why waste your time trying to avoid and get into trouble? Even when my clients come to me, I educate them. See, this is the law. This is what it is. But sometimes clients are willing to take a risk. Then I will advise them. Boss, there is a Supreme Court decision. According to that decision, this can be done. But the law is like this, interpretative area. According to me, you do this. This will be the liability. If you want to take that Supreme Court thing, there might be a problem. We may have to go on appeal, etc. Be prepared. We will send a written statement to them with all the consequences. Then they will acknowledge it. Then go ahead and do what you want. Tomorrow you cannot come back to me and say, I didn't tell you. That's why I said, when you are a consultant, etc., advise the client. Don't. So tomorrow he should not come back and say, no, if I had known about it, I would have complained. He should not say that. Knowingly, then, after I have given him enough advice, if he is violating or if he is taking a risk, that is his call. Then I will go on appeal also. I will argue. I will win also. The Supreme Court decision is in our favor. I will win. But as of now, this is the law. Better advise and tell him, is this possible? Not possible. Okay. Duly, where is it? When is it not so bad? The director should be the application. Where is the word duly? Can you tell me where is that word duly? I'm unable to find it anywhere here. Duly means in the course of, in the normal course. Duly means in the normal course of, normally, like that. Okay? Usually. Like that. Now we move on to another important topic that is called misstatements in prospectus. Misstatements means wrong statements or misstatements. Remember, prospectus is an invitation to the public for subscribing to securities. Therefore, every statement made therein should be true and correct. Every statement made therein should be true and correct. Thus, making a false or incorrect or inaccurate statement is a misstatement. False means outright lie. Incorrect, inaccurate means it is wrong. Okay, statement is misstatement. Omission of material facts would also be a misstatement, where something should be stated. If you don't state it also, there is a misstatement. Are you able to understand? Misstatement in prospectus carries heavy liabilities. Liability may be civil or criminal. Civil is paying compensation to the persons who are affected. See, When 90% of the issue size is not received, you are liable for penalty now. That is a criminal liability. Or you can say penal liability. But criminal liability is being punished by law for violating the law. So criminal liability is for the offense. When there is an offense under any law, there is a punishment. Now, that is called criminal liability. Every law has prescribed penalties. Company laws, already we have seen so many penal provisions. For every offense, offense means doing something which is wrong, offense. Not doing something which you are required to do, offense. Doing something that you should not do, offense. Not doing something which you should do, offense. You have to file your annual return and financial statement. We'll be seeing that within certain due dates. Not filing, offense. Failure, default, offense. Or you should not tell a lie in the prospectus. You tell. That is an offense. Whatever it is. So, for any offense, OFFENCE offense, there is a penalty or criminal proceeding will be there. Prosecution will be there. Even Income Tax Act, non-deducting TDS offense. Deducting TDS or not paying, prosecutable offense. Not deducting out of ignorance is wrong, penalty is there. But if you deduct and don't pay, that's a different thing. Because you are keeping somebody else's money. Government ka money you are keeping. So, the criminal liability is more. Prosecution, imprisonment is there for that. So, it depends. Depending on the offense, the punishment will be by way of fine or by way of imprisonment. That is, you pay to the government. Civil liability is paying compensation to those persons who are affected. See, there is a misstatement in prospectus. Based on that, I have purchased shares in your company. Subsequently, I find that whatever you have stated is lie. Now, I have suffered a loss now. Means the share market price of the share fell down. I paid you 450 rupees. Now it's quoting at 125 rupees. Difference. So compensation should be paid for those who are affected. So we'll see criminal liability first. Criminal liability means there should be a guilty mind. If you want to see unknowingly, if somebody violates the law, to an extent there is a defense. But again, ignorantia juris non-excusat. Ignorantia juris non-excusat. Meaning ignorance of law is not an excuse. But at least you can say, sir, this fellow is a country brute. He has come from some remote village fellow. He doesn't know. Okay, this once you will forgive him. Like that you can do. But knowingly, you know what the law is and you decide I will violate it. That is called mens rea. That is called guilty mind. It is an essential condition. The Criminal Procedure Code of 1973 will be applicable. And the offense is regarded as committed against the state. For that, rigorous penalty is there. We will see. Civil liability. Because of the misstatement, there is a loss or damage to somebody. So basically, there should be a loss or damage. Suppose there is a small statement in the prospectus which says the company is doing this, but that is not being done. But the company issued the share at 450 rupees. On day one, the share is quoted at 600 rupees. Where is the loss? Okay, where is the loss? Still, you can have a criminal liability, but civil liability, you should show loss or damage. Because of the act, only then. Civil Procedure Code of 1908 is applicable. You have to file a suit. But again, here itself, they'll give you some benefits. And civil liability is an offense against the other party. There is the contracting party, counterparty, somebody. Or somebody who is losing or who is suffering damage because of your action, there will be a civil liability. It may be contractual. It may not be contractual also. It may be quasi-contractual or tortious, whatever it is. See, something you have done because of which another person's property is damaged, you have a liability. It's a civil liability to pay him compensation. You have to pay. Criminal liability, illamma, exact opposite. See, this is criminal liability. This is criminal liability where you have violated the law. There is an offense for which there is a punishment by way of fine. This is civil liability and it is not 15.5. It is 15. Okay. This is civil liability where who has to pay? Directors. So the law is making it a civil liability, statutory civil liability. The directors have to pay to me. Why? Because I have lost now. I have suffered damage now. My money is locked without interest now. So that interest has to be compensated to me. So this is an example of civil liability. This is an example of criminal liability. Exact opposite of what you are saying. Your example you have taken correctly, but your understanding is wrong. Sir Keshav, can you confirm that you have understood what I said? No? Okay. Now, this is 34, 35. Now, 36 is inside the company law itself. There is a punishment for fraudulently inducing persons to invest money. Friends, this is not only for prospectus. This is for everything. Any person who either knowingly or recklessly means without caring for other people. Reckless fellow means when you see, I'm sure none of you drink, but suppose somebody drinks and then they drive. It's a reckless. Not only is he endangering himself, he is also endangering other people. So there is a reckless behavior. Okay. Any person who either knowingly or recklessly makes any statement, promise or forecast, which is false. That is why, I will never forecast what is Sensex. What will be Sensex in 25 and all. That is reckless. If at all I am doing it, I will do it with a rider. I will say, according to me, subject to the probability will be that. Even then I would not take that. But I can tell you, the trend will go up. Probability that the trend will go up is high. Like that again. Even there I have to be careful because one black swan event could come. Some extraordinary war can start. Third World War can start. Then obviously the whole market will collapse overnight. But believe me, if Third World War is coming, initially market will collapse. After that, it will be superb. I'm not joking. I may sound very mercenary, but fact remains, World War II brought prosperity. Post-World War II growth. Okay. Can there be a case where both liabilities? Yes, why not? Both. In this case, in our own example, both can be there. Na? He will be suffering punishment by way of fine, and also he will have compensation by way of interest at 15%. Both can be there. Why not? Correct. Interest paid by director is civil liability. Correct. Moving on. 447 is a fantastic section. When somebody is recklessly giving forecast which is false, deceptive, misleading, or deliberately conceals any material facts to induce another person to enter into or to offer or enter into any order. Friends, I tell you, many of these so-called cryptocurrency fellows are coming in this category, according to me. That is, they are making reckless promises. Recklessly, they are saying, if you buy my cryptocurrency, many of them are not even cryptocurrency. Okay, they are not even cryptocurrency. Cryptocurrency is a technology driven. These fellows are using that term to cheat the public to give money. Greed, based on greed. Cryptocurrency is one big fraud that is happening. It has not yet happened in a full way. It is going to explode. Okay, along with this market going up now, the buoyancy, people will then want to make money somehow. So they will see cryptocurrency as an opportunity and they will invest. I'm not against blockchain, please. I'm aware of the technology. Please I don't think I'm an ignorant agriculturist. I know what I'm talking about. But using the concept of cryptocurrency, mining for that and blockchain and all, there are unscrupulous fellows trying to cheat the public, for which the government has done nothing as of today. Nothing as of today. Still on the net, if you go, you'll find. And in between, they were coming out in a big way. Then I think the ministry came out with a clamp. Now they have stopped giving public advertisements, but still it will come again. They will come out with another version. Bitcoin, not Bitcoin. Bitcoin is a specific type of cryptocurrency. They will come out with all sorts of fancy names for it to take money from innocent people. That will come clearly under 36. Okay. Where somebody makes reckless promises. or to induce them to enter into any agreement, or for acquiring, disposing, subscribing for or underwriting securities. Boss, cryptocurrency is a security. It is not a currency. It is a security. I'm assuring you it is a security. Any agreement, because the minute you say it's a currency, you are caught in FEMA. No way. Okay, the guys who issue the so-called pseudo cryptocurrencies are all issuing securities. Basically, it's an agreement. They take money from you and promise that it will go. Okay, so it's a clear security. Any agreement or the purpose of, or the pretended purpose of which is to secure a profit to any of the parties from the yield of securities, or by reference to fluctuations in the value of securities. See, Mr. A promises in a public advertisement, give your money to me. I will invest it in Nifty. I am an expert trader in Nifty, and I will get you 50% return within 1 year of your, all that. Not allowed. If you want to become a portfolio management service, PMS, you can. For that, you have to get yourself registered with SEBI. If you want to be a PMS consultant, portfolio management consultant, then you have to register with SEBI. SEBI will take care of you. They will insist on capital norms and all that, so that not every Tom, Dick, or Harry can go there and become. They will see what is your qualification, what is your background, everything they will see. Any agreement for or with a view to obtaining credit facilities from any bank or financial institution. So you go to the bank and tell a lie or false balance sheet with forged signatures of auditors, has happened. All that will come under section 36. The minute there is a complaint, the complaint will go to MCA, and MCA will take it up. And one more thing you might ask me, why a firm cannot do this? It can. Why only it's coming in company law? Because by and large, people will use the company form of organization to use the corporate wheel to hide behind. So they bought it here in Companies Act. So any of these activities, if somebody is doing through, then they shall be liable under 447. 447 is a powerful section. We'll see that a little later because common penalty is there. That is why. Similarly, class action has been brought here. Class action. Meaning what? See, think about it. There is a fraudulent company. That company has taken money from a lot of people by making false promises. Now we can go and make a complaint and we can proceed and all that. But who will have the time for doing all that? Maybe 300 or 400 people are affected by that misleading statement in the prospectus or whatever. Not everybody will have the time. So what we do, instead of all of us going, we form a group or an association and we authorize 1 or 2 or 5 of us to sign that association. So a common application will be made on behalf of all the affected persons. This is called class action. A suit may be filed or any other action may be taken under 34, 35 or 36. Criminal, civil and inducement and all that. Fraudulent inducement. All cases, a few people, any one person or group of person or association may make a suit on behalf of all. Okay? On behalf of all. This is called class action. All along it was not there. So now this is there, which means if 300 people come together, pool money, each of them gives 200 rupees or 500 rupees. We have some money now. So let us say we collect 300 people, 500 rupees, we collect. Something is there. Now I go to a lawyer, sir, please help us. So we form an association and on behalf of the association, the lawyer will file a suit against the company, etc. And later on, some compensation may be received now. That will be shared by everybody. To my knowledge, when Satyam Computers scam came, a lot of people had suffered because they had invested in Satyam na, based on the balance sheet that this gentleman was fraudulent balance sheet. So the share price went down. So they formed an association and I think they got some compensation also. Criminal liability. I will go to 447 and then we'll come back. 447 is a powerful section. Under 447, where the fraud is less than 10 lakhs or 1% of turnover, fine up to 50 lakhs or imprisonment up to 5 years. Fraud equal to or more than 10 lakhs or 1% of turnover, then the entire amount of fraud is the penalty. Maximum 3 times the amount of fraud. Suppose the fellows have cheated 2 crores, then penalty is 2 crores. See, they have to repay 2 crores with interest, plus they have to pay another 2 crores as penalty. Please understand, those who have invested, they will be entitled to get the money back. One, along with interest. That is one story over. Then, under 447, the fellows who did it will have to be pay another 2 crores. The entire amount, or 6 crores, 3 times the amount of fraud. Of course, by then that fellow will fold and he will go to jail. That's all. Lifelong he'll be in jail. 6 months, maximum 10 years. Because he'll say, sir, I don't have money, I'll go to jail. So 10 years he'll be in jail. Minimum 6, maximum 10 years. Okay. Unless some of that money is available in the bank, then that money can be seized and distributed amongst the people and all that. But beyond that, that is the problem, you see. When you entrust your money to a fraud, that fellow may spend it or transfer it. So it's very difficult. Once this type of investigation starts, it will be a real pain. CBI will also come because in addition to company law, it is also cheating now. So criminal procedure, CRPC will be involved. Automatically CBI will come. And CBI will also go into the matter. That's a different story. Once CBI goes in, that's a different story. Straight away, they'll take this fellow to the CBI office, put him in a room, 3rd degree. They'll give 3rd degree punishment for this person. Okay. In case there is a public interest, that is, where only some specific people are involved, there is no public interest. But suppose this fellow has established branches all over the country. You know, I'm sure you heard that, what is it? Sharda case in West Bengal and Sahara. These are all classic examples where public interest is also involved. And, there are a lot of cases where there is a lot of fraud being committed and, okay. 1 second. Every time this is getting affected. Sorry. Yeah. Of course, luckily, I'm not having any major questions happening. Moving on. So, when there's a public interest involved, then amount of fraud are 3 times, but minimum is 3 years, not 6 months. 3 years minimum, and maximum 10 years imprisonment. This is section 447. Fraud means any act or omission or concealment of any fact committed by any person in any manner with intent to deceive or to gain undue advantage from or to injure the interests of the company or shareholders or creditors or any other person, whether or not there is any wrongful gain or wrongful loss. See, for civil liability, you should prove that there is a loss but for criminal liability under 447, there is no need to show that this guy made a wrongful gain or a wrongful loss. Even if he has not gained, still he told a lie for that punishment. Wrongful gain means gain by unlawful means of property to which the person gaining is not legally entitled. Wrongful loss means loss by unlawful means to which the person losing is legally entitled. See, somebody else's money you take and you misuse it. That is wrongful gain. For him, it is a wrongful loss. Okay. So you have to be careful. Friends, even if you are doing a little bit of corporate, non-compliance and so-called tax planning, please do not be a part of fraud. Please, once you know that the company where you are working is potentially criminal fellows, kindly quit. Because if you are in the company of wrong people, in the long run, it will be affected. Please do not be party to fraud. Don't worry, whatever wealth is coming through such fraudulent activities will not be long-lived. See, Ramalinga Raju was having Benz car and Audi car and huge, but today he's a criminal. Nobody respects him anymore. Am I correct? Maybe some people will respect him, but by and large, when he say Ramalinga Raju, we'll say, "Thu," like that we will say. So that type of thing. So don't allow this to happen. Telling a lie, that's why Satyameva Jayate. Satyameva Jayate. Na Anuratam. Na Anuratam. Lie can never win. Initially, lie may win for some time, but in the long run, Satyameva Jayate. So I'm not, this may sound like silly to some of you. Buddhawala is simply talking nonsense like that. But Buddhawala is talking, don't forget. Man who has lived his life honestly and fairly, with peace of mind, I'm telling you. With a lot of wealth. Don't think that I'm a poor man. I'm not. But money is not everything. Okay. Having money, what is use if you are not able to enjoy it with respect? That's the point. Now we come to criminal liability. Just give me 1 minute. I'm so sorry. My breakfast had come, so I had to go and get it. Now, so when is the criminal liability? When the prospectus is issued or circulated or distributed under Chapter 3 and includes any statement which is untrue or misleading in form or context in which it is included, or any inclusion or omission is likely to mislead, right? So, the prospectus contains any statement which is untrue or misleading, or any inclusion or omission which is likely to mislead. Who is liable? Every person who has authorized the issue of the prospectus is liable. For criminal liability, the penalty is as per 447. We saw that now. That is the penalty for criminal liability. Who is liable? Every person who is authorized, means director, proposed director, promoter, expert. Everybody is liable. What is the punishment? We saw 10 years imprisonment. We have to be very, very careful. Of course, no person shall be liable if he proves the following: immateriality. See, we made a statement, but that is not a main statement. See, for example, we are making a statement that the technology is advanced technology. Okay, there may be something more advanced, but at least the technology is somewhat advanced, but not advanced technology, but it's a good technology. It's immaterial. It doesn't influence in any way. But suppose in the balance sheet, you are giving a figure that is wrong, or you make the projection which is unreasonable, then criminal liabilities. Honest belief that he had reasonable grounds to believe, and did, up to the time of issue of prospectus, believe that the statement was true or that the inclusion or omission was necessary. So honest belief is very difficult to prove. See, you make a false statement, but you say, I honestly believed it to be true. I believed this is true. Like that. Many times, people think that is possible, but it may not be. So finally, that is why SEBI will not permit you to make any statement in prospectus unless it is supported by documentation. Sometimes what will happen, when the SEBI authorities are a little in a hurry, you may push something through. Remember, later on, if somebody in the public goes for a complaint, straight away he can go for complaint under 34, 447 will apply, as we already saw. Civil liability. See, there is a misstatement in the prospectus, or a wrong statement or incorrect statement. Who is liable? Directors, persons who have authorized themselves to be named in the prospectus as directors, persons who have agreed to become directors in future. Means today he is not, but in the prospectus we have said so and so. Usually VIPs, okay, will be all the big shots. They will not become director, but they will say, mention my name. Okay. Suppose the company becomes big, they'll join. Otherwise, they won't join. But if there is any misstatement, even those fellows are not. Because Shah Rukh Khan is going to become a director, only you become a member now. That influences then, or why Shah Rukh Khan? Maybe let us take some very leading scientist. He says he will be a director. We know that he is an ultimate authority on digital technology. That is why we can. So, but if there is any misstatement there, then he is also liable for that. Promoter, named in the prospectus as a promoter, person whose name is mentioned. A person who has authorized the issue of the prospectus. Any authority who has authorized the issue. Expert, 100% liable. Okay. Civil liability. In addition to criminal liability, to answer Jaspreet's question, it is not as if criminal and civil are alag-alag. Criminal liability will also be there. In addition to that, civil liability is there. Okay. The liability to pay compensation to every person who has acted on the basis of a statement or omission in the prospectus and has, as a consequence thereof, sustained loss or damage. So, for civil liability, two things are needed. One, there should be reliance on that statement. On the basis of that statement or omission only you should have acted. One. Two, there should be a loss. Two things are to be proved. Only then liability will be there. If there is no loss, then what is there to compensate? You go for criminal liability. Of course, false statement, punishable. But no loss, then why will compensate you? Thus, all the above persons are personally responsible without any limitation of liability and cannot disown liability by saying they relied on statements made by promoter. The minute you are named as a director, you are caught. But some defenses are there. Very simple. That is, you have to show that you gave your consent, but withdrew the consent before the issue of prospectus. And the prospectus was issued without his authority or consent. Show that you withdrew the consent. That's all. Or prospectus was issued without his knowledge or consent, meaning I am not even aware. My signature has been forged in the consent. Please. So then he became aware. See, he saw the prospectus. His name is there, but it has been issued without his knowledge. And becoming aware of its issue, he forthwith means at once. Forthwith means at once or as soon as possible. ASAP, he gave reasonable public notice that it was issued without his knowledge or consent. So, this is without authority, meaning I withdrew. Then after you put my name and issued, but my authority is not there. This is where I'm not even aware. Yeah, you put my name and you sent it. Now I saw my name is there. Immediately I gave reasonable public notice that I'm not associated. And prospectus is issued without knowledge. Unless you are able to show these two, no defense. Or you should say that you relied on an expert. That this is a misleading statement made in the prospectus, but it is purporting to be made by an expert. I am quoting an expert. I have given exactly what he told, correct and fair representation of the statement. I had reasonable grounds to believe that he was competent to make that comment. Expert was competent to make it. And you also have to show that the expert has given his consent and the expert has not withdrawn his consent before delivery of prospectus for registration. Okay. If you're able to show that, then you can rely on the expert and expert will become liable. You can escape. But only if you're satisfying all this. Expert, can he escape liability? Defenses for liable expert? Yes. That is, we'll come to that. Now, suppose you are saying that I am relying on a report or a valuation of an expert. Then, no problem. You give a correct and fair representation of that statement or report. Or a fair extract from the report. Fair means the entire report should be given. You should not give only what is convenient for you. What you give should be complete. Whatever he has told with his conditions. For example, now when I said now, the Sensex will be going up in the next 3 years. The trend will be going up. But this has a probability of only 60%. Mention that. Also, there could be a black swan event which is unpredictable, because of which there could be a total collapse. Subject to these two, I feel that the market will go up. This is the opinion given by me as an expert in the market. You quote me, no problem, but quote me entirely. Don't simply say Srikanth said Sensex will go up. No. How did I say? 60% probability. That means 40% probability it may not go up. And also black swan event, an unpredictable event which could happen like a third world war or possibility of third world war. Markets may collapse. Then my prediction stops. Everything should be stated. You can't simply take You can't do cherry picking in my report and give only what is convenient for you. Okay. If the expert has provided risk factors or conditions which may affect his opinion, the same should also be provided. Are you able to understand? When I made that statement, I gave risk factor and conditions. That should also be stated. Then, no problem. If there's a misstatement, suppose the expert has made a foolish statement. Okay. But usually when the expert is giving it with all the conditions and all, then no problem. If you don't give those conditions, then the defense is not available. Good. X applied for and has allotted shares on the basis of a prospectus containing an untrue statement. Y purchased the shares from X. Can Y sue the promoters for civil liability, the cession of the allotment and damages? No. Of course, there was a untrue statement in the prospectus. X bought it. But did Y rely on the untrue statement? No, because Y never read the prospectus. So Y did not rely on the untrue statement. And as a consequence thereof, he did not suffer loss. Therefore, if you go strictly by Peak versus Gurney, strictly, then Y cannot claim. Okay, strictly. Now, ABC Motors issued this. Some of you may be very angry because you might say, how is it possible, sir, like that? Point is that strict interpretation of the words. Was there an untrue statement in the prospectus? Yes. Did Y purchase the shares based on a reliance on that untrue statement? No, because he never read the prospectus. But he suffered damage, but he didn't rely on that prospectus, whereas X relied. Therefore, generally we say Y will not be able to claim from the promoters against the prospectus. ABC Motors Limited issued a prospectus claiming that they should see today, instead of going through 34, you can as well go through 36 here. Peak versus Gurney is a very old law. Now today you have 36. You say, right, sir, I didn't rely, but these fellows sold it with intention to cheat now. So on that ground, I will go under 36. But 36 is only criminal liability. 35 is civil liability. You can't claim damages. ABC Motors Limited issued a prospectus claiming that they would be able to obtain a particular license from the government. The directors honestly believed that getting the license was a mere formality. However, the license was not granted. Can the allottees file a suit? Now here what you should know, this is an honest belief. The promoters honestly believed that they could get the license. So there is no liability. This is based on a decision in Derry versus Peak. Now we have 10 more minutes. Actually, if I go on, I can complete this topic today. Yeah. To private placement. Shall I go ahead and do that? Okay. Are you comfortable? Can we go on and finish off private placement today? Then today prospectus topic will be over. This is last. Up to now we have seen up to 41. Now we are moving to 42, right? Private placement. Up to now we have seen public offer. Now we are seeing private placement. Yes, Darshan, I will go on and finish today so that I will get some time. For a particular reason, I want to save time. A private placement is a way of raising capital that involves the issue of securities to a relatively small number of select investors. A private placement is different from a public issue in which securities are made available for sale on the open market to any type of investor. So when I make a public offer, I cannot decide who will apply, who will not apply. Whereas in private placement, my private placement document will be sent to particularly named people. Offer should be made to a select group of persons identified by the board. You can't say to whomsoever it concerns. You can't say dear sir or madam as the case may be. No. You should say dear Mr. Donkey, dear Miss Monkey, like that. Specifically you have to write. To specifically named people. The number of persons not to exceed 50 or such prescribed number. Friends, in the act, they have said not to exceed 50. But in the act, they have given the permission to the central government to prescribe a higher number. The central government, by virtue of this authority, has prescribed 200. Therefore, the higher number prescribed by the central government will apply. So, if you see in the material 50, please remember, central government has been given permission to prescribe higher number. That higher number now is 200. So, up to 200, because 50 is too short a number. So, up to 200 you can send. While calculating this 200, while finding out the limit of 200, you need not include QIB. Do you remember? Qualified institutional buyers excluded. See, what I will do when I'm going for book building process, I will send to QIBs. In addition to QIBs, I will also send to other people whom I know are interested. My friends, relatives, known people, some HNIs, I will send. Specifically with the name. You can't send cash only. But QIBs are excluded. In that 200, QIB excluded. Also, employees being offered securities under ESOP. Employees being offered securities under ESOP excluded. These two people are excluded. Without including these two, 200. The above limit is to be reckoned separately for each kind of security. Meaning, if you're going for shares, for private placement of shares, 200. Debentures, 200. Okay. Offer for private placement made whether by a listed company or by unlisted company to more than the number of persons above shall be deemed to be a public offer. And part 1 of chapter 3, entire part 1 will apply. It will be treated like a prospectus. Got it? So, very important. And one more thing, please understand, even a listed company can go for private placement. Even, why not? See, you are not making a public offer now. Up to 200, you can make private placement and collect money. Nothing wrong. Because you are a listed company doesn't mean you should always make public offer. No. Listed company can, with folded arms, I'm begging you to understand this. Listed company can also make a private placement. Okay? But whatever they do, it should not be more than 200 named people. If you violate it, then whether you are listed or unlisted, if you, more than that number, if you send letters, that letter shall be deemed to be a public offer. And it should comply with the requirement of prospectus. Then automatically that company will lose its... even a private company can make private placement of shares up to 200. So no problem. The private placement offer and application shall not carry any right of renunciation. In the later on, when you come to rights issue, I will tell you about renunciation. That means I am making an offer to A. I am sending a letter directly to Mr. A saying, dear Mr. A, I am giving you details about my company, balance sheet, etc. Kindly go through it. I am very happy to inform you that we are offering 2 lakh shares, out of which in case you are interested, I can give you shares. Minimum application, so much you have to apply. Minimum number of shares you have to apply. In case you are interested, fill up the application form and send it to us. We'll be more than happy to allot the shares. Nothing wrong. This letter is correct, provided in that offer you cannot say, in case you don't like, you can pass it on to your brother-in-law. No. Private placement offer shall not carry right of renunciation. It can be accepted only by the person to whom it is made. Okay. Private placement should be previously approved by the special resolution for each offer. Explanatory note for special resolution should provide information including justification for price and valuation, etc. The value of such offer or invitation per person shall be with an investment size of not less than 20,000 rupees of face value. That is, minimum application should be, one person should apply minimum 20,000 face value. Face value. Remember, suppose you are issuing 10 rupees share at 40 rupees. Then 40 rupees. That means 50 rupees. Minimum he should pay. This is a minimum. You cannot have less than that. Board resolution, if you can actually have more. You can say minimum 50,000 face value and all. But minimum he should apply for 20,000 rupees of face value, not price. 20,000 face value. Got the point? Face value 10 rupees, premium 30, 40, total 50. Now, minimum 20,000 face value. That means minimum 2,000 shares. So 1 crore he has to invest. Only then you can take it. Board resolution is sufficient for issue of NCDs, where the amount does not exceed the amount prescribed under 180. NCD means non-convertible debenture. When you are issuing non-convertible debenture through private placement, no need for special resolution. Board resolution is enough. Where the amount of NCD exceeds limit, that is limit prescribed under section 181C. Later on, when you come to final, you will study company cannot borrow in excess of paid up capital and free reserves. When you come to section 181C, in final, you will study company cannot borrow in excess of paid up capital and free reserves. Where the amount does not exceed that limit of paid up capital and free reserves, it is enough if you pass board resolution. But where it exceeds that, then single annual special resolution is enough. Means you can say, company's board of directors hereby authorized to issue non-convertible debentures. This will be valid for 1 year. Okay. Private placement offer cum application letter shall be in the form PAS4, serially numbered, and addressed specifically to the person to whom the offer is made, and shall be sent to him either in writing or in electronic mode within 30 days of recording the name. So you should make out a register of addressees. Within 30 days from the date of recording, it should be sent. No person other than the person so addressed shall be allowed to apply. No renunciation. And any application not conforming to this condition shall be treated as invalid. The company shall maintain a complete record of private placement offers in form PAS5. Whoever has sent, they have to meet it. Allotment should be made within 60 days of receipt of the application money. If allotment is not paid, then the amount should be repaid within 15 days of expiry of 60 days. So, once money starts coming, 60 days from date of application money receipt, you have to allot. If you do not allot, then after the expiry of 60 days, within 15 days, you have to repay. If not, then beyond 60 days, if you are keeping that money, beyond 60 days, that period, you have to pay interest at 12%. Okay. Now, return of allotment in PAS3 is to be filed, just like, for normal allotment, here also, within 15 days. Money means the money raised on the private placement not to be utilized unless allotment is made. Till it is utilized, it will be kept in a separate account. Till the allotment is made and the return of allotment is made. Now, no fresh offer unless allotment has been made on earlier offer or invitation or the same as in withdrawn or abandoned. So you can't make one offer, then again 3 days later another offer. No. Make an offer, wait. That offer should be accepted fully, or you should say this is withdrawn or abandoned. Select another set of 200 people, start again. Okay. But you can keep on doing it. No problem. No public advertisement or media publicity is to be given. No advertisement. Because the minute you do that, sorry, this is private placement. Letters are sent in the format given in a cover, sealed cover, addressed to that person. No advertisement, no public placement. Offer or invitation for subscription to securities shall not be made to a body corporate incorporated in or a national citizen of a country that shares a land border with India. So private placement offer cannot be made. Private placement letter cannot be sent to a body corporate or a national who is a citizen or incorporated in a country that shares land border with India. So private placement can be sent to other country people. Means if you have NRI friends, you can send, no problem. But you cannot send a private placement letter to a country that shares a land border with India. Examples are Pakistan, China, Myanmar, Bhutan, Nepal, and Bangladesh. Pakistan, these are all having land border with India. Pakistan, in fact, I have been to almost, not to Pakistan, but I have seen the Pakistan border, China border. Myanmar, I have not gone, but Myanmar border, that is Burma. I have been to Nagaland, Mokokchung, I have gone to Burma border. Bhutan, I have been to Bhutan. Nepal, I have been to Nepal. Bangladesh, I have been to Bangladesh. Why I am telling, These are all countries around us except Bangladesh. Bangladesh is a beautiful country, which is right in the middle of our country. See, all the other countries have border with us. This gentleman, Bangladesh ka border, we are around him. You enter Bangladesh from West Bengal, you keep on going, you won't go out of to Burma. You will come back to India only. Maybe you will come to Tripura or Assam. Or this side, Arunachal Pradesh, somewhere. You leave Bangladesh, you'll still be in India only. What a fantastic country, which is landlocked. Of course, they have one sea border, but other than that, India. Only they have Bay of Bengal and India. That's all. So somehow, because of security reasons, our enlightened Home Minister and Prime Minister have decided that these countries' people you should not encourage. No offer should be made to them. Okay. And if at all you want to do it, then you have to obtain the government approval. Okay. You have to go to the Foreign Exchange Management Act. You go to RBI, get approval, and then only come. They will again send it to Ministry of Home Affairs, and MHA will decide. Then only. Okay. So in this regard, suitable changes have been made in Form PAS4 also. This is a recent amendment to the law. Okay. So we have. I'll see the penalty. In case there is a default in filing return of allotment, then company promoters and directors are liable 1,000 rupees per day with an upper ceiling of 25 lakhs. Making an offer or accepting monies in contravention of 42, company promoters and directors, the entire amount raised or 2 crore, whichever is lower, and the amount received to be repaid within 30 days of imposing penalty. So this is the penalty. Okay, one problem is there. Let us see. With that, we will close today. Thank you for your patient support of going beyond the time limit. I'm sure some of you are hungry also. Just bear with me. Matsya Hotel Private Limited made an offer of 50 lakh equity shares of ₹1 each to 150 identified persons on private placement basis, and accordingly a letter of offer accompanying by application form was sent to them after fulfillment of due formalities, including passing a special resolution, etc. One of the applicants, Mr. Ghansham Vyas, made a written complaint to the company stating that the offer letter was incomplete as well as illegal, as it did not contain renunciation clause, as he wanted to exercise his right of renunciation in favor of his son Radhesham Vyas. Is he right? As the right of renunciation cannot be denied, the company needs to rectify its mistake. No, wrong. The company is prohibited from providing right of renunciation. So the offer letter and application form need not include. So B, I think you remember now, there cannot be any right of renunciation. You are statutorily prohibited. So offer is correct. Instead of absolute prohibition, the company can provide right of renunciation limited to 25%. No. Or instead of absolute prohibition, the company can provide 50% of the offering. No. The private placement offer letter should not contain right of renunciation. Therefore, what the company has done is correct. The Ghansham Vyas statement is wrong. Okay. So, we have now completed the prospectus topic also. Thanks to your wonderful support, I could complete it. But if you are doing private placement again, it could be same or new people also. Suppose already some people have, but it should be fresh. That you should withdraw or abandon the old offer. Again, you start fresh. You can send to that same person also, no problem. So B is the correct answer. Everybody is correct. I will upload prospectus also, PowerPoint. I will also upload one assignment of preliminary with answers. And I will upload one assignment of prospectus also. Inshallah, what we will do, before beginning our next class on Tuesday, before beginning share capital and debentures, we will discuss the MCQs and start share capital and debentures. There we will, like Keshav Goyal wanted now, we will begin with that and we will then do it. I thank you for your wonderful support and participation and look forward to meeting you on Tuesday. Bye. Sir, class over, sir.